Good afternoon, it's Brian Shannon here from Alpha Trends Blogspot. Today is Wednesday, the 7th of March, 2007. And we'll start out taking a look at the Nasdaq 100 today, the Qs here on the screen. Looking at a daily time frame, you can see the market was up for a little bit today, but it was really unimpressive the way it tried to rally. This $43 level that had been support, looks like the volume is really dropping off now. The buyers really don't show much conviction here is the way I'm interpreting this. And it's pretty troubling that it can't at least get up to, to this next little level that should have been resistance. I was hoping maybe it would get past 43, run up to 43.30 or so, and then fail, because that would bring in a few more weak longs by getting above 43 and embolden the buyers a little bit. But just the inability of it to bounce here is really kind of troubling, I think. And again, we've got all these moving averages heading lower. In particular, that 50-day moving average is declining. So this market's guilty till proven innocent. That's the way that we've got to look at it. We got neutral on this market back in here when the moving averages crisscrossed. That was the proper course of action. We'd always given the benefit of the doubt to the buyers. But now that the 50-day moving average is declining, it's time to be very defensive here. And that's why I've been saying over and over again the last week or so that I'm not going to recommend any individual stocks until we have a little bit more clarity from this market. I got one person to email me today saying, well, look at how much I made with this stock or that stock. Of course, there's going to be individual stocks. But overall, I still think that cash is the best position for most people. Unless you're an aggressive day trader, of course there's going to be great opportunities. And you know what? I don't care if you've made money or didn't, so don't bother emailing me and telling me that, that you know better than me, because that's not the point. The point is you have to accept we're in a higher risk environment. And as I've been saying, any trades that you take, I think, ought to be for day trades. And if you're making money, that's great. Good for you. That's the way it should be. That's why we trade. But overall, I still think that we've got to be very cautious in here. And most people, the best position right now is cash. The market is looking vulnerable again right now. We've got this 5-day moving average, which is declining. So in this time frame, again, we consider it guilty till proven innocent. Now, we can see that intraday, this $43 level has been important over the last 2 days. So if we can get above there tomorrow, then maybe we're going to have a nice bounce. Perhaps this is just a little bit of a shakeout. But I think that the burden of proof is on the buyers here on the short-term time frame and now on the daily time frame as well. So we've got to consider it guilty till proven innocent, and that the trend once established is more likely to continue than reverse. So don't get too aggressive on the long side. Keep your stops very tight if you're trading long, and be prepared to move to cash very quickly. However, if it does break down really below this 42.60 or so, then I think we could see a test of the lows and maybe even a little shakeout down towards 42. So I know a lot of people like to look at the QID. That's the inverse. Actually, it's the double inverse Qs, and they're looking pretty bullish in here. You've got a big volume breakout or low volume pullback in here. So this resistance looking like support. So it's going to be the inverse of the Qs, obviously. But it's going to be for every 1% that the Qs drop, the QID rallies 2%. So keep in mind that they are leveraged. If you're going to trade them, maybe do half of what you would normally do in the Qs. Otherwise, you're going to find yourself with bigger losses if it goes against you than you were anticipating. So be careful with these with this Nasdaq in here. Same thing for the S&P 500. The S&P, we're looking at this level here at about 140.5, which had been the prior support, and we rallied up to that intraday. Volume dropping off in here. Buyers are losing conviction. It just doesn't feel good to me. We've got the 50-day moving average declining in here as well. So time to be very careful. It did make a higher high, but again, this 5-day moving average is still declining, so it's tough to trust that. So if you're playing this on the long side, be aware that if you are playing on the long side, that you want to keep your stops underneath these higher lows and make sure that you're not accepting too much risk for what is now a counter trend trade, because the trend is lower. We've got lower highs and lower lows. So burden of proof is on the buyers on the daily time frame and on this 10-minute time frame. So just continue to be careful. I think breaking below, really below this level here, probably below the 139 level, then I think that we'll see another test of the recent lows in there. The Midcaps were the leaders for the day. They were up 0.6%. But again, I wouldn't trust this rally. We've got a declining 5-day moving average on the 10-minute time frame. On the daily time frame, you can see that we continue to struggle with this 150 level. Is it 150? Is it 150 and a half? Let's not try and get too precise, but it did rally right up to the 50-day moving average intraday, and that's where it found some selling. So I don't know if that's a coincidence or if there was some sort of supply being released to the market in that area, is what it appears to me to be. But right now we've got probably the best short-term support at about 149.70 or so, and breaking below that, probably we continue down towards 147.5, 148. Again, just be very careful in here. Risks are high for longs. Semiconductors are stuck in the middle of a range doing nothing, so the trends, all the moving averages are heading lower. We've got very light volume the last 2 days as the market did nothing. So burden of proof is on the buyers. Be careful.